The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Louis. Well, we're going to be taking a look at the DAX index this morning, starting out with the 5-minute. And as you can see on that 5-minute chart, there's a small 3-drive pattern that is completing. And what I would try to do this morning is to walk through a sequence of the shorter term, then look at the longer term to see how these numbers and ratios and patterns start to come together again. Once we finish with the DAX, I think it's necessary that we take a look here at the euro on a long-term basis so we can watch it today. Now, if you're looking at the DAX on the 60-minute, you're also seeing that this level up here of around 12,350 was a very important spot related to ABCD structures, and that's another one that's very, very interesting. And then, of course, if we take a look at it on the daily basis, if you'll give me 1 second here. By the way, I have an announcement, but listen, you can see the ABCD here also on the daily basis so that they all are fitting together. What this is basically telling us is that the DAX is at a very critical level from a chart standpoint. Now, that's basically what we're looking at when we're watching this. By the way, my guest yesterday was John Jameson out of the Isle of Man. I've known John for over 15 years. He's really a smart fellow, and he's a lot of fun to work with. And I've been approved by TFNN. We're going to do a webinar together, John and I, on foreign exchange with particular interest on options and how he uses those for stop protection. That'll be sometime in the next 3 weeks, probably a couple of weeks from now. We'll have him on, and we'll be able to do that. But it'll be fun for me, and I think it'll be fun for you, especially if you have an interest in options or foreign exchange. Okay, let's get down to the metal where the things are rocking and rolling today, and that is the euro. What I'd like to start with in the euro is going back to some old cycle work. We brought this to your attention been a couple months ago, I guess 5 or 6 months ago, and the $64 question here was whether we were going to make a 16-year cycle low in the euro. As you can see, going back to 1985, folks, that was the Plaza Accord at the Plaza Hotel in New York. That's when everything shifted and the dollar went into the sewer, and the euro started to have the big rally. You can see the moves that we've had in the euro over the past 30 years. They've been huge. We go from 85 to 150 down to 85 or 87, and then we go up to 160 and 160 down to 140. Now, what we're looking at here, if you'll notice the cycles that I have on the bottom there, you see the very large cycle that's there. That's the 188-month cycle. That's basically the 16-year cycle. If you'll look at the one in between, the smaller cycle, that is 1/2 of that. So that's roughly 92 months. Basically, that theory was purported by Jim Hurst in his book, The Profit Magic of Stock Transaction Timing, that was published in 1970. Now, the foundation for the study of cycles, it was the brainchild of Edward Dewey. He didn't quite believe in the summation of cycles idea. It wasn't till many years later that it is proved that it does work, but it usually only works for 1 or 2 cycles, and then it starts to shift. The book that really described more of what was happening was the book by William Garrett, and that is the, Mr. Gray Matter has just left the Gray, well, I can't remember Garrett's book name, but I'm sure somebody at the den will remember it. But anyway, I met Garrett's wife, Clarice Garrett, came to Pismo Beach and spent 3 days with us, telling us about her husband and stuff. So that was when I was with Bryce Gilmore. But I will remember the book in just a moment, and then but the book by William Garrett really did the same thing. What happened is both of these books came out at the same time. They were both published, I believe, by Simon & Schuster. The difference is the book by Hearst was only $8.95. Now, $8.95 back in 1970 was no small, piece of change. But the book by Garrett was that book cost $29.95. So they sold a total of 200 copies of that book. That's all they sold, and there was only a few of those out. Fortunately, I got a few of those, but that's the basic, theory behind all this, and that's really what we're thinking about here is how this. Now, where I changed was back. I followed this very, very closely. Let's just go on to the next one here to show how these numbers come together, because I followed these cycles very, very closely with summation and nominality. And nominality just means that there's a nominal cycle of 16 years and 9 years or whatever it happens to be. Anyway, that's really the problem is that only works part of the time, and that's what you really have to realize, that everything works part of the time. And then later on, Dr. Miller, along with the help of Jim Twentyman, they really got me interested in the astroharmonic things to show how some of these cycles are related to planetary things that are also nothing but numbers. Now, if we look at a little bird's eye view here of the weekly cycle here in the euro, you're going to be seeing that we're back up to that same level, which is 120.60 in the euro. That's going to be a very interesting spot to look at because we have a double 1.27 expansion there, and we also have a 1.618 expansion at that point. With Mr. Draghi speaking this morning, it's not unusual to see the market spike like this because, everybody has that please let me in, and they might be right. Phenomenon, so they're willing to buy it at any price, and we'll wait and see what happens after the first couple of hours. But that's really what we're watching here in the euro. If that 16-year cycle has really bottomed, then there's a really high probability that we're going to get all the way up to 126 and possibly even all the way up to the 61% retracement of that move from 160, and that would take the euro up to the 135 level. But we are really over a very, very a significant spot at the present time, so we need to pay very close attention to that. That's, I think, is something that we're going to look at very, very closely. Now, today we were supposed to have Shane Smulyan from the wolftrader.net as our guest. Unfortunately, you won't believe this, he wimped out on us being in Miami. He decided to pick his family over us, if you can believe that, and they took a nice little trip up to Tennessee to get out of the storm. So we wish him and his family, really safe travels, and hopefully we'll have Shane on sometime after this hurricane stuff goes slower, but the way they're coming in, it might not be till November. So we hope that Shane can travel safely along with getting gas along the way, because it's really havoc down there, folks. I watched the news a little bit about that, and it's something that is quite scary. That's absolutely for sure. I wanted to also mention here that we also have this Chinese renminbi that was brought to our attention by our good friend Mr. TB over in Las Vegas, and that is also still going lower, folks. We've actually went down and started to go lower, so we'll see. It's making our dollar extremely weak, which makes our prices really cheap, and people will be coming here to visit. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Could we have a possibility that there could be a break to the upside in stocks as the Bradley model has inverted? Well, young lady, I can say this. If that happens, then it's time for me to get on to my old little trusty burro, Walter, hook up the saddle, and head off into the sunset, because anyway, that would be a very, very surprise to me. Let's take a look here at the IWM. This is the small cap and it's been lagging the market. Of course, it's the first one to turn. It's the first one to turn down. As you can see here, that we had a 61% retracement here a couple days ago. We had a little bit of a sell-off these last 2 days, but nothing very dramatically. The market certainly hasn't shown any indication that it does. Now, there's a very high, there is a probability. However, I think it's small because that we could go up and to make new highs, but I don't believe it'll be a breakout high. I can see no pattern that would give us a breakout high. Now, the NASDAQ, that can do whatever it wants because that did the same thing in 2000. If you remember, in 2000, the Dow topped in late January of 2000, but the NASDAQ did not top until March 24th. It made a slightly higher high up in that area, and it was right near 5,000. It was real a heart's breadth, like 49.80. And I remember it because that weekend I was at a money conference in San Francisco, and the people were walking through there holding their equity runs showing how much money they were making. Everybody was comparing how much money they could make. Boy, if that was not a screaming sell signal, I didn't know what was. And well, there's a long story behind that. There is a possibility, yes, but boys and girls, we had the full moon yesterday. Everything's set up for this thing to go down. If it closes strong this week, and we get above these old highs in the Dow Jones and the New York Stock Exchange Index, this is all wrong. I mean, there's no question about it. It would be like in March the 5th of 2009. I said that at that time it was the proverbial end of the line. They had no other place to go other than oblivion. And of course, the too big to fail came in, and that helped it. By the way, that was the beginning of the career of Neil Kashkari. He's a Federal Reserve president of Minneapolis. I believe he will be the next Federal Reserve chairman. Whether I don't know whether it'll be the first one or the second one after this, but someday I believe, unless he really messes up, and people have a tendency to do that, he should be one of the Fed chairmen because he was the architect behind the too big to fail thing, and he has the ear of both sides of the aisle, as they say in Congress. So those are just a couple of things that we're paying attention to. Now, with the weakness that we're having here in the U.S. dollar, we're going to look at these bonds again because, folks, if the dollar is weak, the people should come in and start to buy these bonds. This would be very, very bullish to say, that would be no. Mr. Winsky said that it was. I believe Norm said it was the 6th of September. And Norm is incommunicado because he's also in Naples, Florida. The guy wimped out of us. He decided to save his life as opposed to trade. I don't understand that rationale at all. But anyway, that's what we're watching. If you look at that bond chart, you'll see that the cycle high to high is just absolutely perfectly, and it's in a major bear market. Evidently, that the 11th is a Bradley date. That's the last day of the Bradley date is what that is. Let me show you what I mean. If you'll take a quick look here, you'll see the difference here of what we're watching and whether it's going to be spot on or not. We'll see. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this weekly chart of the euro again, because we went up to this 2060 for the second time. We did it a little over a week ago. We went up and matched that high this morning within 2 pips, and it quickly broke 50 pips. Folks, when something breaks 50 pips in the foreign exchange market, that is a big thing, because this market is huge. It trades $1 trillion a day. I mean, thousands of times bigger than the stock market. So that's real money that is moving around. So pay very close attention to that today, because if we close above that 120.60 level, that's going to be extremely bullish, in my opinion. And remember, the correlation between the gold and the euro is quite high, especially now, and that would mean that gold could be breaking out. And as we have said several times before here, that we could easily see gold, get to that level of, 12. So let's get back to the right number, 1380, and that's certainly a possibility. As you see now, we last time we posted this last Friday, we were 1329. We hit 1351 this morning, so we are still heading higher. We did take out the highs from October, but right now it looks like it still has the potential to go higher. Now we can get a $20 or $34 break in gold without any trouble at all, and it would still be bullish. So always keep that on your watch list, because that would be something that would be very, very interesting. So that's really what we're looking at here. Now, as far as the E-mini goes, if you'll remember, we'll just put up the E-mini on the 4-hour chart here, so we'll go back and review where we were before we had this little bit of a sell-off earlier in the week when we got down to that 2050 area. You'll notice that 78% level comes in around the 2473 level. And if we look at it from an up-to-date standpoint, which I'm going to try to do by just using a 15-minute chart. Now remember, I had to make an adjustment here to going from September to December futures, but this adjustment is in, and this on the December futures would take you up here to the 2472 level. We're trading at 2469 right now. So watch that very closely. That takes out the highs of the last few days, and there's a lot of algorithmic traders and high-frequency traders supposedly in this thing, and they look for those new highs, and if they get there, then they don't follow through then you've got something to look at. But right now, it still has a positive bias, and that's what we're watching, at least here this morning from a technical standpoint. Now, I wanted to bring to your attention one other pattern here in the currencies that is really interesting here, because it's at a major 1.618. The problem, and I'll show you the problem that we have with this, is the Canadian dollar, folks. You'll notice that when I posted this just a little while ago, we were trading at 121.85. We're now down to 121.50. The low yesterday was 121.42. That was a 1.618 expansion going back about a year and a half. As you'll see, there's a small butterfly pattern forming in there, but the problem that we have here is this straight down move where the market has been basically down since the 28th of August without any rally at all. So it's very, very oversold, setting right at the 1.618. The $64 question is it going to be able to hold? We don't know that, but it's just at a really critical level here in the Canadian dollar. So all of these things, there's a lot of things going on. And Norm Winsky alerted us to the sunspots last night in his newsletter, a special report that he sent out, and that yesterday was the largest number of sunspots that we've had in I think a decade. So that's pretty big. Now, I don't know the meaning of that, and I've never done any work with sunspots in the market, but the fact that those sunspots they do affect the energy of what we have going on here on Earth, but how long it takes to catch up with it or not, I'm not sure. The fellow who can answer that, and we will have him on as a guest very soon, is none other than Al Larson from Money Tide out of Thornton, Colorado. And we'll have Al on next week, hopefully, and he'll discuss some of these things with us. Now, yesterday and the day before and the day before and the day before, I kept focusing on one particular stock or chart that we don't trade too often, but it is certainly tradable, and we're all involved with it because it's the cows, the cattle market, beef. And if you look at October cattle here, we are sitting within a heart's breadth of the 78% retracement from February. Excuse me, that was January, and also the long-term 61% retracement going back into 2016. So, and there's a little three-drive pattern also coming in here at this 103.60 level. So if we get to that level, this would complete the ABCD pattern, as you can see. And this is the first major ABCD pattern that we had since this bull market started, well over a year and a half, when Rich Anderson was on a show talking about the cost of production on cattle and also the cost of production on hogs had been reached. In other words, they were trading where they just couldn't make any money by, breeding hogs and cattle anymore. Of course, then the market starts to turn as supply starts to tighten up. So those are the things that we're keeping an eye on this morning. Well, we're having another question here about the Bradley dates. Folks, the Bradley model does a pretty good job, and I'm saying in the neighborhood of about 65% of giving an overall view of what's going to happen. The real value in the Bradley model, from our perspective, is the fact that the dates that the Bradley model has are very, very important. And the second thing is that the short-term trends of the Bradley model, in other words, when it's supposed to be going up, it's going up over a 3 to 4 week period. The problem comes with the inversion, and what Norm Winsky's told us several times, that it's related to these retrograde motions of some of these planets, which would make sense. So anyway, we're going to know something very, very soon here, but the market has a bearish undertone, folks. If you remember hold on a second, this chart from our good friend Arch Crawford, I want to keep bringing this to your attention because this really tells you that the market is not that bullish. And this is basically the 52-week new highs, and you can see they've been in a downtrend, for quite some time. So it's only been the Nasdaq. That's the one that's been the thing moving, and we'll see what is going on. Anyway, that's what we're basically looking at, and we'll see if that's going to be anything to pay attention to the rest of this week. We only got one more day, and then we're coming in. We got, I believe, the 11th. That's the day of the Bradley turn is Monday, so that's going to be something really spectacular, I would think. So we'll find out, what's going to have. It's basically the easiest way to do it. Okay, let me give me 1 second here. I'm answering a question. Okay, that's it. Okay, the question about the cattle. Could you use options? Yes, but I don't follow the options market very often. So I would suggest you check with someone who does. The easiest way to do it, folks, the October cattle are trading for like 105, right? Well, say 104, 105. Go out to December and buy the nearest strike price to 105. It's probably going to cost you about $700 or $800 to buy that call, and that would be your risk on that. And if it doesn't work, you could get out of the call with probably half your loss. So that's the way I would do it. We're going to have John Jameson on in a webinar soon. He'll describe some of these to us. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I'm trying to answer some of these questions for the Bradley model and astrology and patterns and all this stuff. Folks, all of this is based on probability. I hope you realize that, but you also have to realize that you're the one that has to take the responsibility for putting a trade on. I'm giving you, a chart on cattle that I really like. I mean, it's got everything there that you could possibly ask for from a technical basis. Now, if you wanted to get into cattle, you have to risk about $600, which is about a penny and a half. Or if you want to, you could buy a call for December and look at that. And then if it doesn't work in a couple of days and it gets below 103, you could sell the call and recoup probably half or even more of that premium. So that's all I'm trying to do, is to give you suggestions on the way to do this, because as Mark Douglas said, trading is simple, but it's not easy. By the way, Sunday will be the 2nd-year anniversary of Mark passing away. I cannot believe it's been 2 years already, and boy, believe me, I sure miss the guy. Anyway, we'll say a few little prayers for him on Sunday, wherever he is, and I'm sure it's someplace nice. But we'll watch this cattle, because it's got everything necessary, to really make a nice run here. Just the fact that it's made the ABCD pattern, and that's the main thing that you want to to keep an eye on. Someone's asking a question about the euro, the action this morning. Folks, we got up and we touched that same high we made way back on the 28th of August. If you remember, that was a very important time. I believe it was right in the middle of some major cycle stuff, as I recall. Now, we went into the report, we went from 119.35 all the way up to 120.60. And if we were to do a quick little retracement, you'll notice that if the retracement of this thing, the euro, gets below, and we're right at the 50% level right now at 119.99. If we get below 119.70, folks, this could have all the earmarks of a major reversal today, because the going up there and making that double top and then coming down so quickly as fast as it did. I mean, we've dropped 70 pips in just a matter of 30 minutes. So that's not a bullish sign, because it should have broken out to the upside, and it still might. But watch the figure of 119.70. If we get below that, that's breaking below the 61% retracement, and that would tell us that would mean something very, very significant. That would also be affecting bonds, and it would also be affecting the gold. In other words, if we get this euro weakening, that means that maybe this high on gold that we had today at 13.53 would be something of significance, and we could get a $34 correction, which would take us down to about 13.32, which I would think would be a good buying opportunity in gold if it gets there. So those are some of the things that I'm watching this morning from a technical standpoint. Now, whether they hold up or not, that remains to be seen. I wanted to take a second here, because there's a market here that's getting ready to make a major top here. In the $64 question is whether it's going to speaking. Mr. Draghi has been speaking for about 25 minutes, Terry. He started about 20 minutes ago. That's what started the euro's run. And he should be done with his speech about now. The euro, the ECB decided to leave rates unchanged, which, sort of surprises me. What I still don't understand is why U.S. Treasury bonds yield so much compared to some of these foreign countries. That just does not make any sense. Let's take a quick look at the copper here. Long term from November of last year, you'll notice we made a 38% retracement with a nice ABCD format. We went up, we stopped right at that 78% level, had a beautiful 3-drive pattern there. It stayed there for 3 days, and then we had the explosive move where the market went from 275 to 285 in 1 day, and we've continued that all along with only one small 5-day retracement that barely made a 382 of that move, and that tells us that this copper should get somewhere between $3.20 a pound to $3.18 a pound, and so far our high has been $3.16 a pound. So we could be at a pretty good top here in copper, just looking at this pattern. We've had no basic correction here other than 3 or 4 cents, since June. So this has been a very, very strong market, and should be near a spot to be looking at it. The question we're asking ourselves here today is, do we short bonds here, or do we wait to over the weekend? My personal opinion is we hit that spot on number here in the bonds. I mean, look at this. Look at the September bonds. This is equivalent to 158 in the Christmas bonds. Give me a second, doggone it. Hit the wrong button. If you'll take a look at these bonds, I mean, they made a perfect three-drive pattern on a daily basis going back to last April. I mean, that's spot on. Look at the symmetry that's there. You have an ABCD pattern. You have a 1.618 expansion of wave 1 and a 1.27 expansion of wave 3. That's a 1-3 drive to a top pattern. This is where you want to be able to take a look at it. You know, that's basically is what I'm watching. So we'll see. Okay, I guess the cattle are a little stronger today, huh? 107, is that correct? Well, that would be good. Anyway, let's take a look here at the dollar index, because this is another part of the euro that we want to pay close attention to, giving those same resistance numbers that we were looking at 120.60. And as we know, the euro is 53% of the dollar index. And it'll soon be less than that as the Chinese renminbi has moved into major trading. But as you'll notice here at this 191 and change level, and we're below 192. Wow, below 92 today, not 192, folks. Below 92. I believe we're trading at around 91.70 right now. That's a 50% retracement off the low of 2014. Remember, this is a weekly chart, and it's also a 38% retracement from going back to 2011 when the king of the hill, Mr. Tom O'Brien, coined the phrase King Dollar, and it went from 73 to 103, folks. That's a monster move. And right now, we're sitting right at the 382 level one more time. That's why the critical part of this euro at the 120.60 level is so very important. Closing above that, then it would be very interesting. Watch the euro, because if we get below 119.70, we're trading at 119.91 right now. That would tell us that we'd be looking, you know, at what is happening. Okay, that's pretty much what we're watching here. Hold on. Is that true that the Christmas cattle are trading at 107, Mr. Z? I can't access prices as I'm doing the radio show, so I don't really know. But wow, that's very good. 2.5 points. Okay, now let's take a quick look at one other thing before we get to the break, which is coming very quickly, and that is this DAX index. As we looked at it coming into this week, we were still quite bullish, and so far that's been the thing to do. But $64 question is, does it continue here or does it go lower? We'll know that by September the 12th, I would think. September 11th is the big Bradley date, and we'll watch it, very, very closely here. So, all right, we'll take a little break. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to end the show here today with the Bradley model again, showing you this area where we are coming into Monday, September the 11th. Frankly, with that Gartley forming last week and the fact that we haven't gone any higher, the fact that the IWM has not gone above the 618, the New York Stock Exchange Index, major Gartley sell signal. I'll put that up here to look at it. That tells us you want to be short. I mean, I would like to be able to get the date, absolutely perfectly if I could at all, but I don't even know if I can do that. All I'm saying is this could be the flying Walinda. And believe me, there's enough stuff out there in the markets nowadays with Korea and all the other stuff going on that we could see some kind of a shock, but maybe we get a 2% correction in the market. Wow, 2%, that would really be something. I think we almost got one this week, but it was only down 1% when the Dow was down 1.5%, when the Dow was down 250 points on Tuesday. So that's what we're looking at here coming into Monday, but we have tomorrow to work on, and we'll follow some other things. We're going to do a little bit different tomorrow. We're going to look at some of these other currencies. We're going to look at the British pound. We're going to look at the New Zealand dollar. We're going to look at the Australian dollar and some of those, along with a couple of commodities that are looking really interesting right now. Particularly, even though I don't trade this, I've had a request to take a look at the cotton market because of the fact that these hurricanes have caused havoc in the cotton fields across the South, and so we'll watch that very closely. I don't know if you folks know this or not, but Arizona is a big cotton-producing state. Every time we go to Phoenix, we pass acres and acres of beautiful cotton fields, and they're just getting ready to start blooming here pretty soon. So that's going to be a beautiful, beautiful thing to see as we take that drive. So pay close attention to it. That's mainly what we're watching. I'll leave you with this chart on the soybeans because we've just completed a beautiful ABCD in November. Beans 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.